Hello traders, this is August 25th and this is our trade this morning on S&P. Struggling immensely at decision point 2, no surprise here. Most of the time this month market been dancing in endless corrections. Trading room had been open only 18.5 hours. This is trade number 16. This trade reached key Fibonacci target, which making 13 trades positive. These 13 trades reached decision point 2 in front of you. Will this trade reach reversal zone? This remains to be seen. If this trade will reach reversal zone, this is very crucial reminder. You need to know when to move your stop outside of break even and when to monitor for the next target. Every single trade, different stop, different target. Price show you very clearly where your stop and where your target needs to be. You're witnessing that this is S&P short-term chart. And this is exactly the same formula on crucial S&P monthly. Remember decision point 2 on S&P monthly? These levels had been in front of you for the last 5 years, since website opening in 2011. As I've been warning you since 2014, market in massive correction. But as long as decision point 2 is respected, it remains only correction. So why in the world are we dealing with such sluggish markets? Markets are sluggish across the board. Why? Simple. Bullish rally on S&P reached decision point 1, the end of the minor trend. S&P been dancing in massive correction after 200 points bullish rally that also started from reversal zone at the start of 2016. Reminding you, if you know where Fibonacci levels are, it doesn't matter if you are a day trader who trades hourly chart, as S&P staging bullish rally from exact same place as it's done on weekly. It doesn't matter if you are trading gold, as gold struggling to break through the end of the minor trend, but bullish rally had started from reversal zone. All the same formula. It doesn't matter if you are trading oil. Do you know what's happening on oil? Do you know how much pain oil is in for the 4th month in a row because of this Fibonacci level that's been present in front of you for the last 4 years? Identical structure, S&P hourly and oil monthly and gold monthly. Shock or not, all the same formula. Market is flawless Fibonacci puzzle. Once you learn Fibonacci levels, all you have to do is identify. Are you a day trader? Are you a position trader? Are you a stock trader? What would you like to trade? Fibonacci levels will always help you with your patience and discipline, as you know extremely well. Shorting into reversal zone is not an option. And if you know to identify corrections, you cut down on your computer time significantly, as out of 18.5 hours that trading room had been open this month, market been dancing in correction probably for 11 hours. At least. And if God forbid you're trading with indicators, nothing good happens. As market dancing back and forth in narrow range, and if you are trading corrective markets using indicators, ouch, not a happy story. Adjust your trail even closer, 21.72.25. Will price fly until the next level? One step at a time, as S&P struggling to break through decision point 2. Anyone surprised how much S&P is struggling at this target? Do you know where Fibonacci levels are? Did you move your stop outside of break-even? Did you respect this as your target? Price can retrace 10 points from this level. Price can crush and burn completely. Price is testing your knowledge for patience and discipline. Know where your target is. Never disrespect Fibonacci levels. Always play by the rules, especially in day trading, where every tick matters. So here we go, pure magic, as we're discussing with students. Know and respect Fibonacci levels and never break the rules. Know where your target is and know when to move the stop outside of break-even. And this is exactly what you learn in the course, time and time again. 3-point retracement from decision point 2, key target. This is what you learn in the course. This is what you use as your crucial target. Doesn't matter what instrument, doesn't matter what time frame. If you disrespect this as your target, nothing good will happen. If you know where reversal zone is, you exited Apple at 130. Where is Apple today? At drastically lower levels. If you know where reversal zone is, you exited FTI at FIT when it reached crucial reversal zone. Despite spectacular earnings, it crashed and burned. Apple had stunning earnings at 130. Poor earnings on Apple came out when Apple was already at 93. Apple is nowhere near 130. All the same formula. How you use the method is your choice. Key Fibonacci target on S&P. Never to be disrespected. Always to be respected if you know the rules. Speculation and day trading especially, the most dangerous idea ever, will never work. So ladies and gentlemen, here we are. We had taken a well-deserved break, and let me remind you that this was the exit point on S&P. Did you know to exit the trade at this level? If you do, you know where Fibonacci levels are. No indicator on the planet will show you where to enter, where to exit the trade. We knew where to exit and we knew exactly when to take a break. This is what the price had been doing for the last 25 minutes, shock or not, because this is crucial Fibonacci resistance. This is your crucial exit. The fight is on. Price cannot break through this level. No surprise here, as we knew exactly where to exit. And that's the power of knowledge and the price. And that's the reason I live and breathe what I do. Here is a reminder. Knowledge of Fibonacci is everything, as I warned you, as you learn in the course. Knowing where to exit is a key. When I work with hedge funds, we're simply using weekly and monthly charts. What I demonstrate to you in the trading room on S&P short-term charts, instantly you're witnessing the accuracy of the method. That's absolutely undisputed. Market is flawless Fibonacci puzzle. Everything else is a background noise. I don't care if it's S&P, I don't care if it's Valiant. I don't care if it's any chart, any time frame. This is exactly very crucial reminder why Valiant, that massive hedge funds in America, been buying around 200. As I posted last year to everyone very, very clearly, get the heck out of Valiant. Valiant is heading to zeros. This is my post in 2015. How in the world did I know that? Simple. I'm not just sharing this with retail traders. All my posts discussed and shared in the world of finance, time and time again, where I discuss Netflix, where I discuss gold, when I stated in the start of 2015 that gold is heading to 1300, next 1400. All the updates from previous year. Let's find Valiant and let's take a look where Valiant is today, shall we? This is what I said last year. November 10, 2015, I said very, very clearly, sell every single bullish pullback. Have you listened to top hedge funds in America? Have you heard what they've been doing? They had been buying and buying and buying Valiant. Let's take a look what has happened with Valiant since, shall we? As Fibonacci spelled out very, very clearly years and ahead. When price will come to reversal zone, exit the position. Never enter into reversal zone. Let's take a look on Valiant, as S&P clearly doing absolutely nothing as expected. As I said to you, This may be your only opportunity today. This is Valiant. What has Valiant done since November 2015? Ladies and gentlemen, ouch! Oh no, this is how much more Valiant collapsed. Significant amount from 120 further down. And that's the power of knowledge in Fibonacci. You would never be buying Valiant in 200 or especially 250. You would be exiting the position. All the same formula. S&P at reversal zone. Do not short into it. Valiant came to reversal zone. Do not buy into it. That pure and that simple. This is 20 plus years of work with charts that culminated in development of my strategy in 2008, when instead of hobby it became a full-time work. When I lost sleep and I started seeing very, very clearly that market is flawless Fibonacci puzzle and everything else is afterthought. And if you understand how market moves, all you have to do is identify what's appropriate for you. Your risk management, your account size. As formula remains the same. Risk management, trader psychology, the only difference. Traders will start from scratch in the course on August 29th. Course is ongoing. If you are a hedge fund trader or hedge fund manager, please contact me, as the course open only to retail traders, not to financial advisors and not to hedge fund traders. With hedge fund traders, I work on an entirely different scale. So, this is what I also would like to share with you, as I live and breathe what I do. This is a recent email from one of the graduates of the course who shared with me how he trades options ever since Jim started the course, as he had been trying for the last 9 years. Trying for the last 9 years, he's trying no more, as since June 2016 Jim started the course and been trading Iron Condor using Alpha Wave Trader method. And since the month of June, Jim had not lost any money on any trade. I live and breathe what I do, and I always meet with students throughout the US and throughout the world. Meeting my dearest student William and Emmy this week in Southern California had been a true reason why I live and breathe what I do. So, I'm forever grateful for your presence, and if you're serious about Fibonacci levels, I look forward to hearing from you, and I look forward to working with you. 925-257-4298 or info@fibinstitute.com.